SPY, I can't even. The levels that I gave last week of 380 are here. Remember how big and bearish engulfing that was? I don't even think that's going to hold. No, absolutely not. Yeah, this is definitely intraday hold. So what that means is we're at 280, right? Hold on, let me go over here. 281.26. You can see this kind of weekly support. 281.45, that's kind of daily support. And 281.58, that's intraday support. They all rhyme, right? That looks fabulous for a bounce. If we even have VIX sold at 30, 31 area, which would be pretty typical, honestly. Right here, bingo, the little trend line, you know, serves a little area, 31, but it could absolutely turn into what happened Friday. We pull back, and then all we do is we hold. Look at the 7 and 17 held beautifully, and then popped up very strongly. So 945 is typically an area where lots and lots will then monetize their puts and start crashing VIX. In other words, selling VIX. So that's where, if you are bullish SPY, you don't want it to fall below 281, you know, and a half. So that's how VIX typically functions. Unfortunately, we are not in a typical market backdrop at all. Right here, literally, this one triggered way early. Remember when I said it's time, get out of the pool? Remember my get out of the pool one? And then it triggered again right here. Anyway, 381.58, how'd that work out? Yes, they're monetizing. Yes, they're monetizing, but we're still busted. So, 3,800 is absolutely critical. 3806 actually, but you know what I mean. We hit 3808.86. That is pretty important. We did a very quick monetization on a, hold on, let me do this, 15-minute. Look at that. Boom, right into resistance. This is so typical. This is SPX. We also triggered, rolled over. Again, this is all just kind of bearish swing short stuff. It's not a timing tool, but it definitely supports the fact that the market is under the surface. A lot of my rate of change analysis still says it's absolutely not bottomed yet. Okay, I will update all of this stuff tonight, but I'm just showing there was no reason to cover, and I said so on Friday. This is just, there's nothing here from a swing standpoint. I am bearish on all time frames. That's all I'm just reviewing, right? And I went over this as well, that this is definitely, I got to describe this chart a little bit better, but I love this chart. So this is SPX on a weekly. We are having a little stabilization in the market. That's why I want to go over this. All right. So this is weekly, daily. I know I got a lot of marks on here, but let's just run through this again. Trend reversal on the weekly, gap down. Trend is busted. This happened on August 16th, week of. Okay. Yes, we had massive central bank coordination to the tune of $1 trillion. And it started literally with Bank of Japan, biggest yen intervention in 24 years. And then it was just Treasury, Fed, Bank of Japan, again Fed, PBOC, China, again Bank of Japan, again PBOC. Anyway, that resulted in this activity. It was diminishing rates of return. I said this will not close above. We pulled back, right? So will not close above 40.62 on this week. We gapped quickly, not gapped, spiked quickly above it and then got rejected firmly. And 3,800 in a nutshell, this area, you can't see it because I don't have a price target on it, but you can see the black area right here. This is what I affectionately call, and I didn't write it up, the black line of death. So what does this mean? We get back below this level, and there's a lot of support here. So we have a lot of chance to actually bounce in this area. And I'll show it to you on a live chart in just a minute. But right now, that's a major standard deviation move lower. And then we still moved lower. We still have a little bounce right now in progress, but I don't trust it. When we get. I didn't think it was an if, but when, because we could originally, I thought we could kind of go sideways for a while, right? But when we get below this, this is going to just continue lower. We're going to take out 3,600 as well, but it would be a fabulous place to get bears now completely trapped for a bounce. But for right now, this is my first line of real bounce worthy kind of support, and we're not there yet. All right, so breaking it down on a daily, February 2nd, I said market highs are in for the year. And we did a macro to micro webinar. So I'm feeling very, very confident about that still. February 16th, I said it's time. And then again, it's time part 2. Anything below 39.94, we're cooked. So we're going back down 39.50, 38.70, and then I believe very much 37.60. So why is 37.60 important? Because it's the black line of death. You can't see it here. It's not showing up, but it's this. So 37.60 is absolutely essential to hold and grind sideways. We break and close below 37.60. Market is done for the year. That's it. All right, intraday, we already did this. Short at will, and even live, I said we could bounce, but we're not going to get above 39.31.65. We got firmly rejected, and we closed literally at the 38.50 area on Friday. Okay, so that chart, let's just kind of update it right now. Here's SPX. We came all the way down to this level. I'm going to do the 15 real quick. Okay. So we came down here, we bounced, they're trying, right? They're really, really, really trying. I'm on a 15-minute just to show how important that 38.18 was. I'm going to put it back on an hourly. We're still just sideways. Market's kind of quiet right now. Now let me show you the line. Here's the line. We haven't broken it. Oh, there it is. All right, so there's your rejection, right? Perfectly. I mean, literally, this thing has just been phenomenal as far as technical analysis, and kind of we petered out on breadth and net selling breakdown. We got a little support at the 200. We bounced again, big bullish engulfing, bull trap, evening star reversal, broke below 39.94, and I said that's all I need. On high conviction, we're going over. I said we could bounce to the top of this, trend line, the 21-day, but we closed below 39.94. We're rolling over, and we have. We're bouncing now. We can go all the way back up to 38.70. We can go all the way up to 39.06. Doesn't matter to me. Swings on a short basis are still in control. If you are swing short, you still have the wind at your back. All right, so we got a bounce and play. That's basically, okay. And it is short-term bullish, long-term bearish. We definitely have the market pricing in 0 chance of 50 basis points in March meeting. I agree with that. 48% chance of 25 basis point and a 52% chance of no hike. And this is moving a lot. The market is definitely pulling down the terminal rate, which tech does like, which banks also like for that matter. And they're starting to price in rate cuts before the end of the year.